Hi dear traders! Over the past week, a group of financial industry heavyweights has applied to create Bitcoin exchange-traded funds. The Belgian authorities ordered Binance to cease operations in the country as it is prohibited to provide services from countries that are not members of the European Economic Area. The failed FTX exchange is preparing for a reboot. Securities and Exchange Commission Chair Gary Gensler shared his thoughts on artificial intelligence and the need to regulate its usage. Hello and welcome to our weekly review of the crypto market. Policymakers of the world's leading central banks, including the heads of the ECB, Bank of England, Bank of Japan and Federal Reserve, have shared their thoughts on the future of interest rates at a forum in Portugal over the past few days. Judging by the reaction of the USD index, Chair Powell's remarks were quite hawkish. "I don't see anything that would make us want to adjust speed of balance sheet adjustment right now, and I don't see us getting back to 2% this year or next year," he said. In other words, there will be more rate hikes and consequently there will be a stronger US dollar. Yesterday, the US dollar index closed at its 7-day peak and traded at around 103. In light of a stronger greenback, cryptocurrencies went down in price. The flagship coin retreated below the level of $30,000 to the mark of $29,995. On Friday, Bitcoin swelled to a high of 31,400, but it mostly traded in a relatively narrow corridor between 29,738 and 30,958. The gap between these levels totals just 1,220. All in all, Bitcoin has been trading sideways since June 21st. In addition, it became known this week that the dominance rate of Bitcoin in the crypto market has exceeded 50%, a level unseen since April 2021. However, the number one crypto has shown little price change since April 15th, when it soared by 26%. It is now moving sluggishly in lower time frames. However, its medium-term and long-term forecasts are optimistic. Its brief increase in price on June 23rd was triggered by the hype around Bitcoin ETFs. As we know, international investment company BlackRock submitted a Bitcoin ETF application. In addition, the news broke that their first leveraged Bitcoin futures ETF received approval from the US Securities and Exchange Commission. Those events became the driving force for the flagship cryptocurrency, and it soared above $31,000 per coin. Aside from BlackRock, a group of financial industry heavyweights, including WisdomTree, Invesco and Valkyrie funds, has applied to create Bitcoin exchange-traded funds over the past week. However, the initial momentum that boosted crypto assets already faded by the time. There is not much time left before the decision of the US Securities and Exchange Commission. In a few months, the 120 days requested by the regulator to determine its position on crypto assets will come to an end. In addition, there is some macroeconomic uncertainty, especially on the back of the hawkish stance of the world's leading central banks. In light of the recent strengthening of Bitcoin, its correlation with Tether became more apparent. This is perhaps one of the largest and most widely known assets. Tether currently holds an extra $2.5 billion in reserves. Earlier, Tether kept most of its reserves in commercial papers. However, it reduced its holdings to zero last February. Now the Tether stablecoin is pegged solely to the US dollar, and its price is stable at approximately $1. The second largest cryptocurrency has had an even less impressive week than Bitcoin. Ethereum did not spike to its highs and only had moderate volatility within the price corridor between 1,930 and 1,843. Yesterday, the altcoin fell to 1,830. This week, the Ethereum network rolled out Threscriptions, a new protocol that is similar to Bitcoin ordinals. Users now have another way to create non-fungible tokens, NFTs, and other digital assets. Also, this week, it was reported that Ethereum developers were exploring the possibility of increasing their validator limit 64-fold to 2048 Ethereum from the current 32 Ethereum. So far, this news doesn't seem to have cheered up the market in any way. Nevertheless, some optimistic analysts have suggested that Ethereum has upside potential and can even rise to 2,500 in the long run. Given the bearish breakout yesterday, however, this scenario looks quite unrealistic. Ripple has also ended up in limbo over the past week. The optimism about a speedy resolution of the legal battle between the Securities and Exchange Commission seems to have already lost steam due to the repetitive nature of such statements. The company's lawyers have periodically claimed a breakthrough and an imminent victory, but these claims have not come true. The price of the XRP token has been stuck in a range between 0.548 and 0.413 since March 26th. Over the past 7 days, it has fallen to 0.455 from a high of 0.523. Meanwhile, the U.S. crypto crackdown only intensified in June when the country's financial regulator filed lawsuits against the two largest exchanges in the crypto ecosystem, Binance and Coinbase. The lack of clear regulation of the crypto sphere has caused a wide range of problems, both in the U.S. and abroad. Coinbase's executives stated they have met with the Commission at least 30 times over the past 9 years to make sure the company is compliant. However, those visits to the Securities and Exchange Commission have not helped the company. The Commission has also flagged nearly 60 crypto assets as securities, resulting in a sell-off and harming the entire crypto sector in general. The native coin of Binance BNB lost about 4% over the past 7 days and slid down to $227 yesterday. Furthermore, Binance was banned from operating in Belgium due to being non-resident of the European Economic Area. The exchange was also unable to obtain a license in the Netherlands, forcing the company to wind down its operations there as well. Binance is being investigated in France. Meanwhile, police and financial regulators in several European countries have begun cooperating with the Securities and Exchange Commission to investigate the company's activities. Earlier, the U.S. division of the crypto exchange Binance US filed a counterclaim against the Commission. In the meantime, Binance faces scrutiny in Brazil due to a major investigation into money laundering schemes in the country. Remarkably, another infamous cryptocurrency exchange, FTX, has begun talks with investors regarding its reboot. Following its collapse and the arrest of CEO Sam Bankman-Fried, FTX was headed by a new CEO, John Ray. Nearly $9 billion in customer funds were stolen during the exchange's bankruptcy last year. According to media reports, about $6.2 billion of those funds had already been recovered in April. The resurgence of FTX could be a key event for the crypto industry, as its collapse intensified the crypto winter, led to the bankruptcy of BlockFi and Genesis, and sent Bitcoin, Ethereum, and altcoins into a nosedive. With the US regulators cracking down hard, the infamous bankrupt crypto leader Celsius Network plans to sell an impressive $215 million worth of altcoins. The company has listed more than 13 crypto assets, which will be converted into Bitcoin and Ethereum. This unprecedented liquidation could trigger a domino effect in the crypto market. The sell-off is scheduled to begin on July 1st, and it's not yet clear what this financial maneuver will lead to. Cryptocurrency trading is inherently unpredictable, and one event, no matter how significant, cannot determine the course of the entire market. The most important thing is not to give in to panic and stay alert at all times. This was the weekly review of the crypto market by InstaForex. See you next week.